Good morning, happy Tuesday, and welcome to today's edition of Toggle's Daily Video Insights. If you like these insights, please subscribe to our YouTube channel or check us out on toggle.global, where you can also subscribe to our daily brief. My name is Jan. I'm the CEO and co-founder of Toggle, and today we're going to focus on the iShares S&P 500 Value ETF. This is quite a topical discussion because the sector rotation has been a topic of quite a lot of news articles about the market recently. And so really what you'll see Toggle is highlighting today is that in this particular case, the recent move that we've seen in this ETF actually generated enough thrust that historically, at least across the 13 similar episodes that Toggle was able to analyze, you actually saw an extension of the move. In fact, the median gain over the following month, as you will see, was about 1.5%. So that's quite a compelling pattern, obviously something to think about, especially if you are thinking about taking profit here, or you're thinking about adding to your value position. Now, one thing to keep in mind, however, is that although, as we can see here, this is a pattern that has occurred quite consistently over the past 15 plus years. You can see here that this is really appearing through both good times and bad. We saw it just post the global financial crisis, then we saw it during the recent period, and also as far back as 2005. However, despite this reasonably regular occurrence, what we find in here you can see the range over the 1 month is 1.5%. What we're able to look at back here, I don't know how many of you have entered down here, but we typically show all of the stress tests. This upper panel here in particular shows you that this was usually the right thing to do. So post this kind of thrust, the stock has typically returned anywhere between 1% as much as 6%. However, on the few occasions when it was wrong, and the accuracy ratio is quite high in the low 80% range, when it was wrong, you could lose as much as, let's say, 3 to 6%. So the range here is quite wide, which means actually that the risk reward might not be as compelling to somebody who is thinking about entering the trade now. It's more interesting just to somebody who's considering whether or not they would be adding to a position or potentially taking profit and so on. Anyway, so much for this ETF today. In the rest of our daily brief today, we also discuss some pitfalls that investors should consider when looking at investing at a SPAC, which has been all the rage recently. So again, check us out in the daily brief. Thanks for your attention, and we'll talk again tomorrow.